It's a bloodbath today on the crypto market as the Iran-Israel tensions continue to rise. In today's video, I'm going to be running you guys through what I'm doing in this environment. Is it time to start buying yet? When is the recovery going to happen? Is it going to be a quick recovery or a slow recovery? Today, I'll be going through my full game plan because I've been making a lot of moves regarding my portfolio over the past couple of days. And I also think there are a couple key things that people are missing right now. So I'm going to give you a full market update here after what's been a pretty crazy weekend in the crypto market. You can see a lot of altcoins down double digits on the week, in the day. Many alts continue to bleed. This has come off the back of Bitcoin, which has dipped from 105K in the mid-range to below 100K. Right now it's sitting around 99K, and Ethereum also dropping back down to that 21 to 2200 zone. It's also experienced quite a sell-off. If you look at NASDAQ futures, they are also ticking down. I think part of the reason why this crypto sell-off has been so severe is because the US markets aren't open. Now, if you're a trader and you're trying to hedge against potential uncertainty in the market, in terms of markets that are actually open, well, what can you do? You can go long oil, gold, and you can short crypto, which a lot of people have done, or you can take risk off the table. And because a lot of stock orders couldn't go through over the past 24 hours, I think a lot of the risk on market participants either shorted crypto or sold off their crypto to hedge against market downside. And that's combined with the fact that it is on a weekend, which is relatively illiquid in the market, and market participants were already on a knife's edge before this recent escalation. So that's resulted in a lot of downside on alts. But it also means that this is something I'm going to get into slightly later in the video. We could also see a violent recovery on altcoins, just purely down to the fact that a lot of this selling actually front ran equities. Now, obviously, equities in terms of the market, not just the futures market, are going to open tomorrow, and we're going to get a lot more information. I'll keep you updated as that unfolds, but I wouldn't be surprised to see a bounce in the market once markets open due to the fact that crypto is front running here. But I'm going to get into that in more depth later in the video once I explain exactly what is happening. And I'm also going to get into my altcoin buy list, because great times of uncertainty and great times of fear often equal opportunity in the market, and great times of greed often mark times that you should be going progressively less aggressive in the market. I think generally speaking, the worse sentiment gets, the more progressively aggressive you should become. And the more heightened sentiment gets, the more progressively defensive you should become, not the other way around. Where I'm seeing a lot of people now starting to panic after the crypto market's already had a major sell-off, front running the US stock market open. I don't know if that's necessarily the prudent thing to do right now, but we're going to get into that. So what has actually happened over the past 24 hours, which has caused this sell-off? Obviously, the markets were already selling off, but it's gotten even worse. Well, the main thing was the US strikes on Iran. So the US attacked 3 key nuclear facilities early on Sunday in an operation the defense secretary claimed obliterated Iran's nuclear ambitions, although a full assessment is ongoing. And then Iran said that the US is crossing a very big red line and has warned the US against further action. And we've had Trump also going back and forth. So look, I'm not going to get into too much speculation today because I don't claim to be a war expert or a geopolitical expert. You know, my edge is in markets. But I think it's important to understand the trigger behind the sell-off in the market. And this is due to this escalation of the conflict that is happening in the Middle East. And you can see here that Iran is looking at the possibility of retaliating. Once again, not going to speculate too much on if this retaliation will be harsh and whether that's going to lead to conflict that involves other nations. I'm hearing a lot of World War III talk. Usually when you hear that, that's actually a buying opportunity in the market because there's a lot of panic right now. If you look at this article from the BBC, it says that Iran pretty much has 3 options right now. 1, retaliate hard and soon. It could potentially look at striking some of the US's bases. This is the riskiest but the most aggressive option. Option B, retaliate later. Wait until this current escalation subsides and then attack when they least expect it. And then option number 3, this would take the most restraint, is don't retaliate and look for a diplomatic resolution. That's obviously something the US is trying to do, but I think this seems unlikely in the short term, but you do never know. I think the market is now starting to price in the fact that this conflict is going to last slightly longer. Last week, if you looked at polymarket odds, the odds of resolution were much higher. Now you're starting to see the odds of, example, the Strait of Hormuz being closed now above 50% at points today. And that's a significant oil trade route. Around 20% of the world's total oil supply actually runs through that strait. So it could potentially disrupt global supply chains, and that's why there is significant interest in the region. Although there has been conflicting reports, like this one saying that Iran's parliament approves the closing of the strait, and then it came out later that that's actually not the case, and it hasn't happened yet. What we did see is ships actually divert their course this morning at around 9:50 a.m. Any ship that was going into the strait actually turned around in the morning. So clearly they're trying to avoid that area, and there's definitely a chance that conflict in that area escalates, and this is one of the things that triggered the further sell-off. This announcement here is when we saw a wick on Bitcoin below 100k and many alts. Now, Rand comments here. I think he has a decent point. He says, you'd need to be an absolute fool to think that the US didn't consider the implications of the attack and the possibility of the Strait of Hormuz being affected. I suspect they have a plan in place if this happens to limit the implications. And one more thing, I was watching Rand Short on Instagram that he mentioned is the fact that they struck during the weekend, during a time when the markets weren't open. So obviously trying to limit the impact on markets, but what that meant is that crypto actually took the brunt of the hit because it was one of the only liquid markets that is actually open and that you can trade 24/7. It can be an amazing thing. On weekends, we've seen some huge pumps in the past, especially in bull runs, because the markets are trying to front run Monday open, but it can also go the other way. And illiquid weekends combined with war escalation and conflict, I mean, it's no wonder the market dumped. This is pretty much the perfect recipe for a big crypto sell-off. And look, I did my best to actually prepare you guys over the past few weeks. I did a video 5 days ago with Paradise where we said that we weren't buying any crypto yet because there was a strong possibility that Bitcoin was going to come back down into the 96 to 98-ish K zone, and we also had this 94 level marked out as well, making the point that crypto is into resistance, and whenever Bitcoin is pushing into resistance, risk reward simply just isn't there to buy. So hopefully you guys avoided FOMOing into that big Bitcoin pump if you did watch that video. I also did a video 9 days ago saying why I was holding half my portfolio in cash. So high alert, why I'm holding half my portfolio in cash. I go through the video as to why I'm risk off and why I was looking for resolution or a bit more clarity in the markets to go more risk on again, because I'm happy to be patient in the market. And I ran you through, this was 9 days ago, and this was one of my least viewed videos, which is frustrating because I noticed that whenever I'm super bullish on the titles and thumbnails, the videos get a lot of views, but then when I'm actually trying to protect you guys and save you money, they get no views. So if you're losing money in the markets, but you're only paying attention when the market's bullish, you have to reflect on why that's the case psychologically. Because I ran you through in this video a full custom dashboard that I built on Claude, and there was a large percentage chance probability that we determined that Bitcoin was going to go lower. You can see here, regional containment, 40% probability Bitcoin goes down to 95K. Then there was a lower probability we see a deeper retest, and then a 25% probability we saw a V-shaped recovery, which was the lowest option, which obviously didn't happen. So, balance of probabilities was to be risk off, hence why I was holding half my portfolio in cash. And it goes into earlier videos as well. If you've been watching the channel, I've talked a lot about short-term trading on the channel in terms of rotations. But generally speaking, I've had this theory that it was going to be a choppy summer now. I didn't know that the escalation would happen in the Middle East. None of us knew. But one thing, I have been quite vocal on, actually from 6 months ago, is that we're going to see a summer chop. And I did a video a few weeks ago teaching you how to actually survive the summer chop. And something I spoke about was actually using that period to your advantage when altcoins are relatively illiquid to accumulate ahead of a rally potentially later in the year. And this is the same thesis that I highlighted in this video here on April 6th when I said I was making my biggest Bitcoin buys ever at 75K. You could see the video April 5th when Bitcoin was 75K. I highlighted my full game plan, and my game plan was that the markets were going to chop through summer and then rally towards Q4 this year, and then potentially peak either between mid to late Q3 and Q1 2026. So nothing has actually changed in my plan for many, many months. There has been nothing to suggest that I should change course. Even this conflict hasn't caused me to change course. It's basically in line. Obviously, you don't know the catalyst at the time, right? You don't know what the headline's going to be, but it is in line with the theory that we were going to get a choppy summer and then have some resolution towards later in the year. So if that's the case, I think it opens up a lot of opportunity in the markets, and that's something we're going to discuss today. Actually, look at some altcoins where you could get some opportunities, because this peak fear, which is happening right now, can actually create some strong opportunities in the market. Now, you have to be measured, and I'll go through two scenarios for how you can actually accumulate and be safe about it. But I definitely think now's not the time to suddenly become bearish. Now's the time to actually progressively become more aggressive as markets go lower. And that's largely why I've been sitting mostly in cash, like I told you 9 days ago, because I'm just waiting for the right opportunity to go more risk on in the market. And this is a period, I'll tell you now, where I am looking at deploying some more. I have been a bit hedged though. You can see in my Discord here, I have a Bitcoin short, which is up 30% just to hedge against downside. This is something that I highlighted roughly a week ago in my Discord. Sorry, I post a lot in my channels. You can see here, I said 100 to 102K likely next stop. This was on the 14th of June. So what's that? 8 days ago, I was talking about this region being a potential lower high, and what ended up happening, it did squeeze slightly higher, ended up coming back, bearish rejection, and then now it's all the way down here. So, I was prepping you guys for this as well. I just want to say that in case people in the comments are like, oh, Miles, you're always bullish. Well, for the past few months, I actually haven't been that bullish. I've just been focused on protecting capital, short-term trading opportunities, and waiting for the right time to strike. And actually now I think we're getting towards that point. Now that some people are getting bearish, I'm getting more bullish. As Ryan says here, the recovery will be super fast. I definitely think gun to my head, I think early next week, Monday, Tuesday, we rally. I think this could definitely be a local bottom. I see Fergie's in the description saying, yep, bottom is in. I see James Wynn telling Ryan to F off. He's definitely max bearish right now. But the point I made before about, crypto dumping on an illiquid Sunday and an illiquid Saturday night ahead of US market open, that is a recipe for a bottom in my opinion, even if it takes a bit longer to resolve. So a likely scenario is, because a lot of people are covering their shorts, they're going to close in the beginning of the week because they use crypto as a proxy to hedge against risk when the stock market isn't open. What we probably see is a short squeeze on Monday. Also, funding has ticked extremely negative at the moment. So if any sort of buy pressure comes into the market, you could definitely see a squeeze. This could result in prices climbing a bit higher towards the start of the week. Look, this is gun to head stuff. It's just me saying what could happen in the short term. My long-term thesis is a lot more high conviction than my short-term thesis. But yeah, this is my prediction. We see a squeeze early in the week. It could be Tuesday, not Monday. It could be either. Maybe even Wednesday, but within that period. And then you'll probably see the market start to flatline. It might even give up some of its gains, because then the next bit of directionality is going to depend on macro factors. If we see full resolution, you could see a V-shaped recovery. You could see here that actually every time there's a conflict, especially in the Middle East, we do see a rally over the 6 months happening after. So it can be a strong buying opportunity, but we won't know that until we get more information. So yeah, short-term prognosis is, I think we find a floor over the next 48 hours, then we start to climb up. We see a bit of a short squeeze. Then the markets will probably be undecided for a little bit as they figure out what to do next. So there are short-term trading opportunities. I have been buying some stuff today, selling some stuff, rotating into other coins. I'll tell you exactly what those coins are in just a minute here. And then also prepping my longer-term DCAs. But we'll get into that strategy very, very soon. In fact, let's get into it now. Kook says, feels like the worst is over. Futures will gap down on open Sunday night, which is exactly what ended up happening, as you can see there. Stock market will open green on Monday. Maybe not, but I think at some point it'll have an intraday recovery. Safe to buy the dip in crypto ahead of Monday open. Inshallah, we resume up only. I wouldn't say safe to buy. Like it's definitely not a safe environment or a comfortable environment to buy, but I think risk rewards to the upside is the point I'm trying to make here. And this is a good tweet. It's a simplification, but it's a point that we're going to take into this next section here as we start discussing altcoins. This is Jen saying, I'm buying altcoins that didn't give a F about the bombing when it happened. Beach underwater type coins. Now, the first type of coins I'm DCA-ing into are the ones that have shown relative strength in the market. And there are 3 that come to mind right now, or 4. The first one is SPX. This pumped all the way to $1.70. It's now had a 46% retrace. There is an interesting DCA pocket in here. In a couple of minutes, once I go through all the coins, I'll tell you my methodology for DCAing. Because you have two options. You can do a time-weighted average price, a TWAP DCA, or you can do a technical DCA. And you might want to combine the two. But these are the technical levels. This pocket in here could be an interesting pocket. But this, for me, is a longer-term one. I think Murad has shown that the community is very strong. He's been working for his bags, and this is the first big dip we've seen. I mean, most of the altcoin market is in a downtrend. This is one of the only tokens that is in an uptrend. So that's what I'm saying about, these beach ball underwater type coins. Useless Coin is another one of these that has found a lot of traction recently. It's exhibiting this rally-based rally pattern that Paradise has highlighted on the shows and in the Discord of consolidation before legs to the upside. So you have a leg to the upside, consolidation, leg to the upside, consolidation. Typically, you can either play the breakout to the range high or the range low retests on a coin like this. From its local peak, it was down like 34%, now stabilizing around 27% down. I'll go into the narrative more in a future video, but basically it's a useless coin. It does absolutely nothing, and that's kind of the meme, that it does nothing. It's like FOD coin, like hot air rises, so to speak. But yeah, this is one that's shown a lot of strength. It's been on my radar. I actually mentioned it 40 million in the Miles High Club AMA, so I know a lot of you guys got entries, but now it's the first good opportunity since I've last spoken about it. Hyperliquid is the next one. This is another coin similar to SPX. It's been in a very strong uptrend, and you're now finally getting the first, not only 1 day money noodle, but 2 day money noodle retest here. A few more bullish prints, and this is a pretty good sign that, in my opinion, this level is going to hold. Look, just like many coins in this video that I'll mention, the best strategy is just to DCA, and Hyperliquid has one of the best charts in the midst of uncertainty in the market. And yeah, I mean, it was pumping. It went to $44. Everyone wanted to FOMO. Hey, what did I say? What did I tell you? I said, wait, you'll get an opportunity on that stream with Paradise last week. And lo and behold, we got an opportunity on Hyperliquid. Also, okay, maybe this is a little bit crass because the entire market's dropped, but I did sell some of my Solana and actually rotate a lot of my Solana, and Solana's been absolutely tanking, and I got a lot of hate for that video a few weeks ago. Oh, why are you selling your Solana? Because Solana's going to go to the moon. But yeah, just wanted to mention that. Well, it actually is showing relative weakness versus the rest of the market, but the whole market's going down, so it's not really a flex, is it? A lot of my bags are actually down a lot as well, the things that I'm holding long term. But look, my long term stuff I'm not really worried about. I'll mention a couple in a minute here that, yes, they're down a lot in price today, but I have like 6 to 12 months targets on them. So if you have a target for 6 months on a coin, why would you care if it's down today? If anything, you should be buying more. But I definitely get why short-term traders would be panicking if your long setups have gone against you. But if you're a long-term investor, you shouldn't really be phased by this, in my opinion. It's not, unless it really does turn into World War III, which I don't think it's going to, then I think it's ultimately an opportunity. Okay, the next one's Grass. This is a coin that isn't quite as strong as the other ones. It was super strong, but there's been some FUD recently. I think you've got two scenarios here. Either there's a reclaim, like deviation reclaim play into this 130 region, and then you can target this high here, or we just keep bleeding into this zone here. I honestly think it might be the latter. Whatever setup presents, I'm going to take. But anything in this zone, I think, is a decent accumulation opportunity for Grass. It's, I think, one of the strongest fundamental revenue generating coins in the AI space. So keep your eye on that. Now let's go into RWA. It's a narrative that I think is ready to burst whenever the market's ready. Hey, market might not be ready for a few months, but I want my bags to be packed. And there are a couple coins I'll mention specifically today that I think could be good DCAs, but Syrup is one of them. This is a coin that I called at around 35 cents. It ran up aggressively to 54, and now it's down 30% from its peak, which is good because this is the first opportunity to actually accumulate. There are two RWA coins which I'm bullish on longer term, and I think are going to do really well. Syrup's one of them, and the other one is CHEX. Now, CHEX is having a absolutely horrible day. I actually de-risked some on the breakdown earlier, and I'm looking to buy back at some point at range low, which we're approaching now. But you could see here, technically it hasn't actually broken range structure. We're seeing a test of the bottom bit of this range here, but often these end up being deviation plays. So you can see here it's kind of just pinging in between the resistance level and the support level. They just got a Kraken listing, so that was actually a bullish catalyst, but I think the news was front run, and what happened was the range high retest coincided with the Iran and Israel conflict, so there was a massive sell-off, which took it down to range low, and then it puked again. You also don't know, I don't personally know, but you also don't know what happens with these exchanges. Like potentially people front run the exchange listing and then sell once it's on a major exchange, or people or the exchange. I don't think Kraken does this, but some exchanges, they actually take fees, and then they will, once the token's listed, they'll liquidate that token. So I don't know what's happening on the market making side. I haven't dug into it, but there's a chance there's been exchange selling as well, which has sped up this downtrend. But look, fundamentally, it's what I'm saying before. Like, I think CHEX will do really well long term in RWA. I think it's one of the only like legit RWA projects that has strong fundamentals and a good narrative. So alongside Syrup, they're probably my two. PENDLE as well, I really like. It's just hard with a lot of coins that haven't found a floor. Like, I do find it easier, I'm going to touch on this in a second, to buy coins that are at key high time frame levels. You're kind of catching a knife a bit on certain coins. But then again, if you have a long-term outlook, then you don't need to do too much TA, but I do like it from a risk management point of view. CPOOL is at a very good bid zone. Like, if there was ever a level to bid and have invalidation, it's probably this, because it's like right in this green pocket that I highlighted a few days ago. So just keep that in mind as well. I do fundamentally, I think, slightly prefer CHEX and Syrup, but CPOOL is probably my third pick in terms of RWA, and then ONDO is like my top proxy, but just because it's the BlackRock coin, but that's a little bit off as well. So just keep your keep your eye on this potential range low retest. Now, one other token that I'm adding to my portfolio for the first time since 60 cents, and I feel like I was one of the earliest creators to start talking about SUI, but then everyone kind of took the narrative and ran with it, and then I just thought it was overvalued at a certain point. Ran even higher than I thought, actually. SUI. And SUI, I think, it's a coin that, I was very, very bullish on at like 40 cents. It ran up so much, I was like, I can't buy. But now it's finally getting a retrace. So from the all-time high, it's down 56%. From the local high, it should be down 30 or 44%. Now there's this range, previous range high, but now support level at $1.90. Look, it's actually not that far away. So if there were further chop over summer or further downside, it's 19% away. That's a level I'd love to bid. I did start nibbling in now. But that's really the level that you want to put more size into, and that's probably what I'll end up doing. But I've been digging a lot more into SUI, meeting with a lot more teams, and meeting with people involved in the ecosystem, and I've become a lot more bullish. I was kind of a bit hesitant, but after reviewing their strategy a little bit more, I actually think it's pretty well positioned alongside Solana, to kind of be that second or third chain after Ethereum. So bullish on what SUI can do longer term. But in terms of buying, that's the level. I'm not going to go too much into alts today, but there are a couple like AI coins which are heavily beat down. ANON's one of them. You can see Daniela here did a tweet. He said, Strait of Hormuz is one of my favorite fishing spots, or Hormuz. Everything telling me to lock in even more. No chance of fishing, only building. Now, ANON's down a lot, but if you actually look at the product, like take the token out of things, they're building a lot of cool stuff. Like they just had a Kaito campaign that they just announced. They obviously have their HUD, which I'm doing a guide on, which allows you to do like AI-based charting in real time, which is super cool. You could see, creators buying and selling. You can put all sorts of strategies on top of your charts, as you can see here. So I've just been using this as a user. So token aside, I think they built a really cool product. And this is just all on top of their base model, which allows you to obviously automate your DeFi and automate your trading. So, okay, price is down a lot, but as a product, I don't see this going away. I don't see Danny stopping building. And just in general, if you see any product where the founders are still shipping relentlessly during downtrends, you can bet at some point they're going to have an uptrend again. And ANON's one of these tokens, and it's similar to CHEX, like because a lot of their liquidity is on chain and not on centralized exchanges. You have these very violent dips when they happen. So ANON drops more than any other token when it drops, but then when it pumps more than any other token. I mean, just a couple of weeks ago, it pumped to like $7-8 because there's not much overhead resistance. So if a token's a bit more illiquid, you have to be prepared for extreme downside and extreme upside. Buy extreme downside, sell extreme upside. And obviously you can have, invalidation levels where you play around. Like I've de-risked a little bit at points and then bought back in, and I'll play around with a bit of an active stack, but I have my principal long-term holdings that I'd only really look at TPing on like big pumps in terms of my long-term bags. So that's ANON. Now in terms of strategy, that you kind of have two options now. Let me just run you through them. I said in my Discord today, Mars High Club, obviously, where I've been keeping you guys updated, probably been spamming you guys too much today. But it's one of these days where I need to be here for the community, and I want to make sure you play this right and don't succumb to this, these manic decisions that people seem to make during big dumps and big pumps. But I said one of the best things to do is to pick 5 quality projects. I gave you a few, but you could pick any of your own. TWAP, so time weighted average price DCA for 6 weeks, should be higher come Q3, Q4, which is in line with my thesis that we hit a Bitcoin all-time high later in the year. Don't overcomplicate it, but obviously if you want to pair with technicals, even better. And then I went on to give like a second bit of nuance here. You basically have 2 choices. I was asked in the group by someone, they said, look, if an altcoin can't find a 4 and you bid a support and now you're bleeding, what do you do? And I said, look, you have 2 choices with altcoins. One, you can bid high time frame levels and be willing to cut fast. I think CPOOL is a great example of this because this is a coin that's at support. Now, if it starts to go below and confirm below, so I'm talking daily candles, bearish retest, work down onto the lower time frames and then cut your position if we start closing below, but you can kind of bid and then cut if we break down. It's the same with many tokens, like even CHEX, right? There was this range low here, and this is drawn badly because actually it should be a wider range, but because you have these lows here in this cluster. But anyway, you get the example. You could bid here and then cut straight under. Now what I think actually happens is this probably comes up a little bit and gives you a retest. So depending on how it reacts here, you can make a decision to cut. But I think with most coins in general, you want to be looking at your invalidation levels if you're bidding off the technicals. So that means that, okay, maybe you need to have like 1, 2, 3 stabs at getting the right trade, but to actually get the right entry, but at least you're going to protect against downside in the short term if market keeps going down. So that's option 1. Option 2 is you can wait for strength first. So you might say, look, I actually don't want to buy right now. I'm not going to buy grass, for example. What I want to see is a bit of strength. I want to see I got to get the brush tool. I want to see a bit of strength. I want to see a reclaim. Then I want to see an uptrend. Then I'll get back in. And this is fine. Like you're going to miss, maybe 20, 30% of the move by then, but at least you're getting it on confirmation. I don't think anything's wrong with that. And I actually think a lot of people would be better off waiting for resolution than to try and pick, catch knives. What I'll tell you is peak fear is peak opportunity in the market. So I am personally TWAPing into the market across the coins that I mentioned today for 6 weeks. I may sell some at points. I may de-risk at points. I may trade around a little bit, but my goal is increase net exposure. As I said, I was 50% cash. I went even heavier a few days ago as well, maybe even to 55, 60, which is pretty crazy for me. I'm going to go back in now over the next 6 weeks, over this choppy period. And any major wick to the downside, as long as it corresponds with high time frame levels, I'll use to accumulate alts. There are some alts where I'm breaking that rule and I'm just DCA-ing because I want to hold them long term, and that's also fine. Just be willing to hold long term if there's no technical invalidation. And then there are also many alts. That's why I'm not giving you a huge list today, where I'll just wait for an uptrend and then I'll just get in on an uptrend. And you can actually do a mix of both. So you can bid, I'll give you an example. You could bid syrup at a high time frame level, which is this mid-range here, this red dot at the 38 zone, right? You can make your first bid, and then you can also have a clause that you want to put the final 50% or the next 33% on a show of strength. So it can go a little bit lower, then it can come up, reclaim, and show some strength. And then on the lower time frames, you could start getting in on these dips and these like mini range breaks, like on the 4 hourly, 1 hourly. Like if they do rally-based rally, like rally, form a base, you can get on the breakouts and get in back on the uptrend with the other 30%. So it's not like, you can only buy coins during dips. You can also run a strategy where you buy uptrend dips, which honestly for a lot of market participants can be better. Like there's a strategy in the market of, And I think you need to be very good to actually play this strategy. But, I have seen a lot of traders do well where they'll just like base or denominate the majority of their portfolio in cash, so like stable coins, and then they'll wait for risk on periods in the market. They'll take on a lot of risk and look at more shorter term narrative trading on alts as opposed to bag holding a lot of alts. And I think if you are really in tune with the market, you can get away with that a little bit more, which is why I like to hold a bit more cash, closer to 50% than the average person. But I understand the audience as well. Like, a lot of you don't have that much time to trade, and you might not have the experience. So in that case, you're better off just picking a few quality projects you think will come back and just DCA-ing on red days. I think that's the safest thing to do. Just keep in mind, Bitcoin dominance is still, on a major uptrend. So until there's a big reversal there, I wouldn't even be considering alt season. I'd look to pick off certain individual alts you think will do well, because Bitcoin dominance can keep going up to 70, right? But you shouldn't really be relying on Bitcoin dominance going down and reversing to make money on alts. I think you just got to try and pick the right coins and be in the right narratives. And if you do that, you could beat a lot of the market, because this is also accounting for a bunch of dead alts, right? That are just emitting new tokens all the time and new coins, which is just dispersing supply across the market. So it's not fully indicative of the entire altcoin market, but it is a signal that, look, we're still in Bitcoin mode. So, even if, you're really risk off and you just want to trade Bitcoin and buy Bitcoin on the dip, you'll probably do well. Like Bitcoin will hit 150 in my opinion. That's 50% upside. Now, yes, a lot of alts during that period are going to go up a lot, but if you don't back yourself to pick them, then, it's fine to play Bitcoin as well. But I do want to run that barbell from having some risk exposure as well, because that's where you make the most money in the market. I guess that's the thing about the altcoin market. You lose a lot when the market goes down. I mean, my portfolio has taken a hit, my long-term portfolio. Even though I'm relatively protected with my cash position, still taking a hit in the short term, which isn't nice. But then you're also rewarded a lot more. Like when the market actually does pump, I'll use ANON as an example. Like, it's dumped a lot, but then when the market pumps, that's a coin that pumps a lot. And it's the same with alts relative to Bitcoin. So you kind of have to go through these periods of like losing a lot and feeling horrible. And then you're rewarded with these big periods of massive upside and outperformance. You can't have both. You got to pick your poison. If you just want slow, sustainable gains in the market, just hold Bitcoin. But I know a lot of you are degens, and I'd be lying if I said that's what I do. So, yeah. Hopefully, you guys enjoyed this video. That's pretty much it on my side. Don't let the summer chop you up. Because, this isn't something we haven't been expecting. This is something I've been talking about for many, many months on the channel. Now, did I expect Middle Eastern war? No, but catalysts or news can often come after price, which is like an interesting concept to wrap your head around. Obviously, this news cycle has affected price, but Bitcoin was already looking weak, struggling to break those highs prior to the escalation. So the chart was already telling you that it was weak, and then this was just the cherry on top. So nothing untoward or unexpected in terms of what's currently happening in the market versus what our plans been for quite some time now. So I will keep you guys up to date if anything changes. I hope you have a nice rest of your day. I'll see you in the next one. And good luck in the market. See you later, guys. Peace out.